Welcome back to Books and Backbone. My name's Donna Harris, CEO of Bookkeeping Made Simple, your host, and the person who's been asked, what exactly do you do every month? More times than I can count. Today's a solo episode, no guest, just me and a question that I think every small business owner deserves a real answer to. What does monthly bookkeeping actually include? Not the vague answer, not the sales pitch, just what should be happening inside your books every month and what should make it possible for you as a business owner. Because I've talked to a lot of business owners who have been paying for monthly bookkeeping over the years and genuinely don't know what they're getting for that money. And in some cases, when I take a look at what's actually been done, neither do I. So let's start with what most business owners think monthly bookkeeping actually is. They think it's data entry. Someone logs into QuickBooks, categorizes the transactions that came in from the bank feed, and makes sure everything balances. Maybe they get a PDF report at the end of the month. Maybe they don't. And honestly, for a lot of bookkeeping engagements, it's exactly what it is. Transactions goes in, report comes out, bookkeeper disappears till next month. That's not bookkeeping, that's data processing, and there's a significant difference. Real monthly bookkeeping is not just about moving numbers around. It's about making sure those numbers are accurate, meaningful, and useful. It's about giving you a financial picture you can actually trust and actually use. So let's talk about what professional monthly bookkeeping actually should include. I break it down into 5 core deliverables. Number 1, transaction categorization. Every transaction that hits your bank account or credit card gets categorized correctly, not just dumped into general expense or left in uncategorized until someone gets around to it. My personal favorite is the girl that put everything under business expenses. I have no idea what those are. It means having a chart of accounts that actually reflects your business and maintaining consistency month over month so that your reports are comparable. Number 2, bank and credit card reconciliation. Every account gets reconciled to the penny against the actual bank statement. Not just balanced, reconciled. And I want to be clear about something here because it matters. Reconciled does not mean correct. It means the amounts match. I do speak English. Reconciliation means proves that the amounts match your bank statement. It does not prove that the categories are correct. It doesn't mean the tax treatment's right. It does not mean the account structure makes sense. And all of this has to happen. Number 3, financial statements. Every month you should receive a minimum, a profit and loss statement, and a balance sheet. If you're using QuickBooks Online, those are available under the Reports tab. And a lot of times we don't actually physically send those reports because the client doesn't look at them. But they're available under the Reports tab. You should be able to see those every month. The P&L tells you what came in, what went out. The balance sheet shows what you own and what you owe. The balance sheet is cumulative over time. And the profit and loss is a snapshot of what's going on for a specific period. Together, they give you a pretty complete picture of where your business stands. Number 4 is tax readiness. Your bookkeeper should be thinking about taxes all year long, not just in April. Are your meals being categorized correctly? Did you know there's different ways to categorize meals? If you are close to home and you have a lunch out for networking purposes, that is only deductible at 50%. If you're working away from home, then those meals get categorized differently. They're travel meals. More than 100 air miles from your location, from your home base, can be considered travel meals, and we need to know about that. Those are deductible at a higher rate. Not 100% because the IRS figures you have to eat, but we can deduct more if we know that you're traveling. Are contractor payments being tracked for 1099 purposes? Did the W-9s come in before you made a single payment to that contractor? Are the loan repayments being split between principal and interest? These aren't year-end questions. These are monthly questions. These should be asked every month. Number 5, and this is the one most bookkeepers skip, the conversation. Someone should be sitting down with you periodically, maybe not every month, but periodically, and explaining what your numbers mean. Not just a PDF dropped in your inbox, not a green check mark in QuickBooks, an actual conversation that explains, here's what your P&L is telling you. Here's what changed from last month. Here are the concerns that we saw as we did your books, and here's what we should be paying attention to. Well, let me spend a few minutes on categorization, because I do think people underestimate why it matters. Every transaction in QuickBooks lives in a category. That category determines how it shows up on your profit and loss, which determines how it affects your tax liability, which determines how a lender reads your financial health. So when a laptop gets categorized as office expenses instead of equipment, and yes, I know laptops can be very cheap these days, so it's tempting to put them into office supplies for a $300 to $600 laptop. It's not a minor error though. If it overstates your expenses in one category, understates them in another, and misses the depreciation treatment the asset should be getting. So your balance sheet is now missing an asset. Your P&L is now wrong, and those errors compound month after month. Or, this is one of my favorites, when a loan payment gets categorized as an expense. This is a very common one. A lot of people do not understand that the expense is generated when they put the expense on their credit cards, and then when you pay the credit card bill, that's a loan payment. It gets treated differently. So only the interest portion is an expense on these repayments. You take out an SBA loan, you take out a small business loan of any kind, you need to be tracking how much your interest is, because you can keep interest as an expense, and the rest of it goes to the loan repayment. The principal reduces the liability, and if your bookkeeper is coding the whole payment to interest, your loan balance on the balance sheet never goes down, and your expenses are overstated every month. These aren't hypothetical errors. I see them all the time, and they're invisible unless someone's actually looking at the books with a critical eye. Not just processing transactions, not just accepting bank feeds, not just being a clicker. I'm going to click here and I know this is going to happen. I already mentioned this, but I want to say this again because it's an important reconciliation, because it's important. Reconciliation is a completeness check, not an accuracy check. We are looking for duplicate transactions. When we reconcile, we're looking for things like duplicate transactions, missing transactions. It just means that everything's there and the bank account balance is correct. It does not mean the tax treatment is right, and it does not mean your books are clean. It is, however, an important starting point. There's also something called a reconciliation adjustment. I only put these in when I have someone who's had the same books for many years and they've never been reconciled. Sometimes it's very difficult to go back 10 years in the books and reconcile everything. So I may go back to a time prior to the most recent tax year. For example, the most recent year, let's say they haven't done anything in their books since 2015, although transactions have come in, they haven't reconciled anything. This has happened. And now it's 2026. They need their 24 and 25 tax returns done. 23 is done. They don't want to go back and mess with it. I might go in and say, okay, I'm going to reconcile from 24 forward, but I already know that's wrong. And sometimes it even goes back so far that we can't even get those bank statements anymore. That's about the only time I think it's acceptable to put in a reconciliation adjustment. When your bookkeeper can't find an error and the account is not balancing, they are basically saying, I give up, I'm just going to put in a reconciliation adjustment. If it's more than a couple of pennies, that's a red flag. If they can't explain to you why they did that, what was the missing expenses? Where were the transactions that were missing? If they can't explain that to you, that's just hiding the problem and not solving it. Clean books do not have reconciliation adjustments. If they were done properly from the beginning, there should never be a reconciliation adjustment in the books. However, sometimes if it's just a couple of pennies, we kind of will tolerate it. Every month, you should at least be getting a profit and loss on a balance sheet and ideally a statement of cash flows. Most business owners focus entirely on the P&L because it answers the question they care about the most. Did we make money this month? And that's a valid question, but that is not the whole story. The balance sheet is where the real story lives. And I'm going to go ahead and add the statement of cash flows. The balance sheet shows you what you own, your assets. It shows what you owe, your liabilities. These are your loans, your credit cards. And what's left over is your equity. That literally is the accounting equation. Assets minus liabilities equals equity. If your balance sheet has accounts receivable that's 2 years old and hasn't been collected, that's a problem. If your loan balances don't match your actual lender statements, that's a problem. If there are numbers in accounts nobody can explain, that's a problem. A good bookkeeper is going to review at least the P&L and the balance sheet. Ideally, she's also going to provide you with a statement of cash flows. Statement of cash flows shows you where the money to operate your business came from. Did it come entirely from operations? That's really what we want to see. Did it come from operations plus loans? Did it come from operations and loans plus stock sales? Did you have to sell some stock and give up some equity in the business to get enough cash? That's going to tell us a lot about how your business is running. And ideally, we're going to review those reports with you. Maybe not every month. That's a higher tier of service in our plan, but we want to review these with you at least once a quarter. Now, I want to also talk about, I really do want to talk about the conversation. Data without context is just noise. A PDF that gets mailed to you as a PDF and is never discussed is not a financial tool. It's a document that sits in a folder. It doesn't help you. Unless you yourself know and understand these reports, you need your bookkeeper to talk to you about them. What changes the relationship between a business owner and their financial information is someone sitting across from them and saying, here's what your numbers mean. And this can be both physically, face-to-face, it can be virtually, but this is what your numbers mean. This is what we see change from last month. Why am I getting loan payments in and I don't have the information on the loan, for example? Here's what we should watch. This is what we should do about it. When you have a bookkeeper that does that, you now have a financial partner. It's not a quarterly review call. Actually, it is. It is a quarterly review call. Your quarterly reviews, and we can do it up to monthly, should be a conversation that's built into every engagement. And that is what we do at Bookkeeping Made Simple. I've talked before about financial avoidance. In fact, I did a short on it yesterday outside. The very human tendency that we all have to not open the report because we're afraid it contains bad news and it feels like a verdict. It feels like that report is saying I'm a bad person, I'm a bad business owner. That's not what it means. The antidote to financial avoidance, and by the way, it's very, very common. It's even more common if you're going through a hard time in your business and maybe the cash flow isn't there to cover your obligations. That's when a lot of people just stop answering the phone, stop talking to people, stop opening emails, is when they know they're in trouble. But the antidote isn't to avoid it. The antidote isn't better reports. It's not to send fewer reports. It is the trusted voice that makes the numbers feel safe. It is that sit down Zoom call saying, okay, I've reviewed your reports and I looked at what happened last month and what happened this month, what happened last year, what happened this year. This is where you're at. This is what we are concerned about. And this is what, since I have an MBA, my brother, who's also my bookkeeping accountant, has an MBA. So we're also going to talk about, this is what we think you should do to turn this around. This is a CFO conversation. And we want to talk to you. The bookkeepers can talk to you about what they saw changed over time. Your CFO is also going to talk to you from those reports about what you need to do to make the necessary changes in your balance sheet and your profit and loss to make sure that your cash flow is positive, your balance sheet shows a positive equity, and your profit and loss shows that you are making a profit. We want to see all of that, and we want to see it for you. And so that's the conversation we want to have. So the bookkeeper should explain the reports. Your CFO, such as an MBA, is going to talk to you about what those reports mean and what you can do to make changes. So what if you're listening to this and you realized what I just described is not what you're currently getting? Well, number one, this is very common. A lot of small business owners have been getting data entry dressed up as bookkeeping for years. They're only finding out now because they're starting to ask better questions. Second, ask your bookkeeper, your current bookkeeper, can you show me reconciliation reports for all accounts? Are there any uncategorized transactions? Do our loan balances match the lender statements? Are personal and business expenses completely separated? And for small business owners, and in this particular context, I mean, if they have fewer than 10 to 20 employees, I guarantee you you're commingling funds. It's almost a reflex. It's just, I have the business debit card in my pocket. I don't have my personal debit card. I'm just going to swipe at Walmart for my family's groceries for the week. That is an enormous no-no, and your bookkeeper should be calling you out on it. Those answers, though, to those questions will tell you a lot. Third, if the answer is that your books need work, consider a cleanup engagement before moving forward. We offer 3 levels of cleanup depending on how much needs to be fixed. Basic starts at $997 flat rate. That's ideal for books that are mostly on track but need a professional review. Our standard overhaul starts at $1,997, and that's our most popular option for businesses that have been doing it themselves for a year or more, or for a year, and they need the structure rebuilt. And our deep clean starts at $3,500 for situations involving multiple years of messy data, complex loans, or significant commingling. Once the books are clean, bookkeeping starts at about $600 a month. That's the foundation. If your books are clean and your bookkeeper is doing a good job, now you have a foundation. You know what your business looks like, and you know how to have these conversations to make it all make sense. Now you can go to a CFO or a fractional CFO, such as Dave and I at Bookkeeping Made Simple, and have these conversations about how to get your business in the position you want to have it. Now, with correct bookkeeping, it's all going to make sense. Monthly bookkeeping is not a checkbox. It's not a PDF in your inbox. It's not a green check mark in QuickBooks. It's an accurate, complete, decision-ready picture of your business delivered every month with someone explaining to you what it means. If that's not what you're getting right now, you deserve better. And it exists. If you want to talk about what your books actually look like and whether they're serving you the way they should be, I'd love to have that conversation. Find me at mysimplebookkeeping.com. Consultation's free. The clarity's worth a lot more. And if this episode resonated with you, if you enjoyed it, please like, share, and subscribe. Share it with a business owner you know that's been paying for bookkeeping every month and still has no idea what they're getting for it. They need to hear this. Hit the red notification bell if you're on YouTube so that you get notified every time one of our new episodes drop. And I'm Donna Harris. This is Books and Backbone. Thanks for listening.